it's on right now because anything you do.
I don't always like videos, but when I do, I always prefer Road Dog Crypto. Trade wisely, my friends.
Gary was a man who thought he could do crypto, sharing at the SEC.
You lock what you see. Then please subscribe only. And if you like what we do, then smash that like button too.
Are you trying to find financial freedom by trading and investing in them there cryptocurrencies? But are you having a hard time being profitable and making them winning trades? Well, you can get all that knowledge and a whole lot more just by watching the Crypto Chart School playlist over here at the Road Dog Crypto channel. You just go right down here where it says Chart School, you click that full playlist, and voila! They got all the knowledge right there.
For those of you out there that have been hitting that like button, I appreciate it. Thank you very much.
All right, welcome to the first live chart school in this series. And to get started on this one, I'm kind of just trying to feel out where you guys are, for one thing, what you guys might be struggling with, and any kind of comments that you want to leave in the chat there, and especially after the stream's over, leaving any in the comments after, that would be helpful because I can always refer to them. Sometimes something might get mentioned on Telegram, and as you see, things get buried in there and forgotten sometimes. So I can always find a comment attached to a video or something like that, though. That's kind of easy for me to go back over. So that's a good way. Also, whatever we can talk about here live, get some feedback from you guys. But I'm going to go over some basic things tonight, mostly market structure. If we got time, I might do. We can get into some horizontal support and a trading strategy based on that. But we're going to kind of start things. Let's get a nice little clean Bitcoin chart here. Or let's make a nice. Are you an important one? The thing about doing any kind of a class or anything is, for somebody's been doing this for a little while, we get used to it. You get used to things, and you forget about that beginner's mindset, and you remember some of the challenges that you went through, but you forget some of the things, or maybe some of the things that you explain. I've grown to take for granted and may assume that you already know, or maybe you do already know something that I just keep repeating 100 times over. So it's that kind of feedback that I'm kind of looking for, and you guys will help kind of drive the direction that this chart school, these episodes go. We got the soothing music in the back and the turkey face looking at you. I was trying to go over my faces, which one I wanted to pick out. I'm like, this is the most friendly looking one. Hard to get mad at a turkey, I find. All right, so let me say hello to everybody. We got Roguelide. How's it going, Roguelide? We got Sin, Glasshopper 77, Glittery Marshmallow, Ryan K, MG Motorsports. All right, I'm going to keep my chat box right over here so I can keep an eye on that. Feel free to ask questions at any time. The question, about where to start in some places, because we could start on candlesticks and get something, but I kind of just want to touch on just the market in general, because I think that's a good place to start. The kind of the overall view of what's going on. So let's start there before we start diving into the nitty gritties. And it will probably focus, pretty much on technical analysis to start out with. Then we'll gradually kind of phase into the trading aspect and just let things kind of go from there, the general game plan. All right. You drew a blank, didn't you? Shut up, Sean. You're interrupting me. So the general, this is coming from Wyckoff theory, and a lot of our stuff comes from Wyckoff theory. But you have a cycle, and I think it's just like in school and in mathematics or in science, and things go up, they go down, they repeat in cycles, waves, if you will. This market, and this is hopefully on an uptrend. That's how we're looking. We're going to consider Bitcoin here. And what you have let me get a different color. Yeah. So no, not you, dude. I wanted the other one to be that way. Yeah, this one. Yeah. All right, so you have market phases, and here's one right here. You have distribution phases. Let's start here at distribution. That's where things sell off. That's the top of your market cycle, right? Then you have your markdown phases. And this is, the ride down on the roller coaster, hard, fast, furious, faster than you would want it to go down. Few chances to escape if you're having to ride it down, trying to long it. So this is when things start coming down. Then we have accumulation phases. Then it repeats. We have market phases, distribution, markdown, reaccumulation. It repeats, same thing. Wash, rinse, repeat. So if you know that and can identify what phase of the market that you're in, well, you can play in favor of it, right? And some strategies work better in a market stage. Some things work better. Range trading, for instance, works better in any kind of accumulation or distribution. And here's one thing on the market phase. Well, it's not just straight up, right? There are areas of reaccumulation, and I mean it's a up down jig-jag thing. So that's the cycle in a nutshell right there, what we need to know. But let's break the cycles down just a little bit. Do we have a fancy one? I haven't used the fancy one. Let's use the fancy one. I don't know what that does. Gosh darn it. I'm not trying to do anything too weird. All right, I'm going to just draw it. All right, so when price moves, we have so I wasn't going to do that. This is a very professional production. Thank you all for paying to be here. All right. So let's say we have price. This is how price, what we want to see with price. This is how price travels. You got to understand price action. This is way price action. So price will go up, and if you're in an upward trend, I mean, you'll have a correction, and then you will go up again, and you're making a series of higher highs and higher lows, and that's what makes an upward trend. So that's what we see in market phase. What we ideally want to see in market phase. So downward trend also consists of lower lows and lower highs, and they're not too fine. And your accumulation distribution, they're basically kind of, they get the sideways chop that we see quite often, because 80% of the time in this whole market cycle that we just talked about over here, 80% of the time is spent in these accumulation areas, or these little areas of redistribution down here. I forgot to mention that one. The little stops where we go sideways. 80% of the market is spent range trading, so a good range trading strategy during that time is quite beneficial. And only about 20% is the fun part, the shoot up or the shoot down part. So it's helpful if you kind of know that, so you can plan out what kind of strategies to use in the market and everything. But getting back to the market structure, what we look for, this is kind of akin to Elliott wave theory, and in a nutshell, what it means is that you get an impulse wave, you get a correction. This would be your wave 1, this wave 2. Maybe we can actually use the tool for that. You get a wave, you start with wave 0, this is your 1, the down one is your 2, and then you get a bigger 3-wave up is how it's supposed to be. Your third one's supposed to be a nicer, bigger wave. And then you get a 4th wave, but here's the thing about the 4th wave, it can't overlap this one. So there's some rules here, and there's one that I skipped over too. I probably got, but you get your 4th wave, and then you can go for your 5th, and that could be a lower high, it could be a double top, or it could be a higher when for the 5th wave. So you got those variations to look for. Now, the thing about wave 2 that I forgot to mention is that wave 2 cannot come below wave 1, so you can't have a lower low and apply this wave structure there, right? But in essence, it's just a series of higher highs and higher lows until you get to one that kind of doesn't pan out as well, or it just kind of stops there. Then from there, it goes through a correction phase. And it's called an ABC, and that's where you go from a 0, you get your A, you come up a little bit to retest some area or something, right? Probably can make it a little bit more better there. And then another move down. And then after you complete that little 3-leg down, well, the party starts all over again, hopefully. And then we start working our 3 humps and a dump, as I affectionately call it, because that's essentially what you get. You get 3 humps on a nice solid trend line, and then you can get your little dumpy dump. And we'll get into the trend line strategies, but how we use this and how all this stuff kind of meshes together and works together. And you don't have to be an expert at every little thing, but a little knowledge of a little bit goes a long way in understanding the market, but that kind of helps you. So what we want to see in an uptrend, higher highs, higher lows. In the downtrend, we'll expect the opposite there. And that's the basic of market structure, and it just washes and repeats. It's a cycle that just repeats, and you see it over and over in the charts where things go up and then the things come down. Let me check with the chat here. Hey, we got Joe. How's it going, Joe? I'm bored PC guy. How's it going? Best $3 I ever spent. Hey, cool. Make sure we got live chat on. So far, I think we're going all right. Well, that would. All right. Okay. So I think that's one of the important things to concepts to wrap your mind around when you come into this market. And you can see that when we zoom out on Bitcoin and now let's apply that. And so, we see our accumulation phases right here. And we see our markup, and this was distribution right here. This is a markdown. This was a accumulation or a reaccumulation, I guess you could call. Now, I'm not the perfect one on the terminology, but I will reference you to where this comes from. So if you want deeper study, this falls under Wyckoff. So if you go to Investopedia and you type in Wyckoff and market cycles, or just talking market cycles, you should be able to pull up this type of information there. It goes over this. And then this was we got a double top in this cycle. I mean, normally this is what we're looking for. This is our market cycle. This is what we're doing. It just gave us a double top over there, but in essence, man, can I not get a good line that stands out? I guess yellow always works to stand out. And what you see happening down here, that's so cool. I wish I knew how to get all that off. We did the same thing over here, and if we had a chart that went back, I mean, this is only in 2018. We still got, about 9 years of price history that can be tracked. And I think actually this guy over here does it. No, it only does futures for as long as it has futures. I forgot. But you got the same structure going on there. It's just that your waves got bigger. Now, if I follow this one, it's going to look kind of weird. But this is our bigger thing, our bigger accumulation, right? Maybe on the weekly we can show this better. But that's what we're seeing now. We're seeing this thing just grow exponentially, especially Bitcoin, right? We got that one, we come down, and now this is our new that was our bottom, and now we're still going. This is our reaccumulation right there. We had a reaccumulation right here with Bitcoin. Technically, we've only been showing one. Seems to be the norm that we can get before we start getting on up there. There's no set number of how many reaccumulations that you can get, so we don't need to get that in our mindset. But that's basically what we're doing now. We're looking for our distributive top. We're in the market phase for Bitcoin right now as we speak. So went over market cycles, a little bit of Wyckoff, a little bit of the Elliott wave theory, and that really, in my opinion, that's all you need to know for Elliott wave to get by and for it to help you. It helps me to remember, you know, if I got something like this and maybe it's starting to look a little rough or something, it helps me remember, hey man, there should be another wave there to come. And that's just one way that it helps me. And then it also helps me to remember, you know, that correction that we always go through, especially when we break the trend line. So we haven't got to trend lines yet. The next place that I would probably go, other than maybe throw in an indicator, maybe we should talk about indicators. There'll be a couple that we kind of use, and the ones I'll probably refer to and probably use in the first strategy would be this one, the RSI. Now, I am here on TradingView, and that's something to see that I would probably take for granted that somebody just coming in was like, where's this program? What software did you download? And I didn't, but I think you can. I think they have that option, but this is the TradingView website. This is also what most exchanges will actually show you. I mean, they got contracts with this. Is what even Dick Screener, some of the other things, exchanges, services and things like that. Where are you, Dick Screener? Is this you? No. We're very well put together tonight. Just letting you know, we are on top of our game. Here's an example though. Like if you go to a popular search place for the coins, and everybody should know this, CoinMarketCap or CoinGecko, click on the coin or whatever, they give you a little chart. And you click on the little candles over there. Well, this stuff comes from TradingView, and usually you can click on this sometimes. Yeah, and it'll just it'll open up a TradingView chart. And the same thing you see on most exchanges. And you got access to all the tools here. You just have to set them. So this is not hard to come by for anybody that might have that question. To have access to all the tools that we're going over. They're available out there, and you don't even have to have having an account to use them this way. TradingView does have a free account, and you can choose to upgrade if you want. I've got the pro version just because it's got a few extra bells and whistles, and it's not necessary, but it does find helpful. Lets me have more number of indicators increases. That's the story behind Market Cipher too. CryptoFace wanted to get, you know, TradingView only limited 5 indicators, and he wanted to make one indicator that had 5 in it, and that's the story behind Market Cipher. So the RSI is one that we'll probably pick up here. Might as well just talk about it. This is a momentum oscillator, and what that means is the strength of the move. And if something is, you have to determine the strength of the move, but the levels that it is, the bottom, the areas down here, and the top areas will tell you if it's oversold or overbought. And that used to confuse me because, like, what? I'd get them mixed up and feel like I had dyslexia or something, or maybe I do. I don't know. I don't think I do. But anyway, so when you see this line come all the way down here to the bottom, this is nothing but a range, just a range from 0 to 100. That's all this is. That's all a lot of this stuff is. It's just a little gauge. These are just little measuring tools. It's like a temperature or a thermometer on your stove tells you when it's too hot to touch. when you don't want to be touching it and it tells you when it's just right and you probably want to get into it. But here's the little zeros, and I think you guys can see that behind my little dancing banana over there and all the way up to 100. Ooh, the arrow, that's perfect. Yeah. Ba-da! Looky there. Ba-da! Sound effects are free tonight, not charging at all. Now, there are some dashed lines here for this RSI. We got a 30%. These are, you can set them to whatever you want. This is the standard, and you know, why change it unless you want to be that guy that's got to be different? And so, I'm special. Or you know, maybe you come across to something that this, I don't know, trips. I don't know. But most people don't reset them or anything. Just use it like it is. However, what you get used to using on these indicators, and that's something about understanding them, because some of them look just terrifying. All people do is do something called back testing, and it's just going back and just seeing how they're related on the chart. You learn these things as you go. You get used to, you get to know them. The personality kind of comes out. And you say, "Oh, I see how you thinking. I see what you're talking about. Okay. You telling me that people over here, when things are down low, let me get the other lines off. You're telling me that when you're down here like this, people got scared and sold off and everything, and that's probably a good time to look. That's the key thing, to look at buying. And then just because an indicator comes down here doesn't mean that it's always just the perfect opportunity. Like, there's a strategy here for the RSI. Here's the strategy. The strategy for the RSI, as I had learned it, was that when you break down below that 30% line, remember that 30% line right there, that you are overbought. And here on this indicator, I like it puts a little red there just to kind of rub it in your face, like, haha, you're overbought. And so, you know, you're like, that's looking juicy. The strategy, the original strategy is that once you get past that 30%, once it breaks past, that's your buy signal. Once it passes by there, that's your buy signal. Now, when I used to be with my bots and everything like that, before I learned real TA, I did learn all about these indicators like that, so I guess it was a good experience. But that's what my bot would wait for. And it would buy whenever price or whenever the line got above the 30% there. The tricky part was it would buy there and then it might sell. You wouldn't sell, would you? So I'd had troubles getting it to buy exactly when I wanted it to buy. But sometimes those bots would buy every time it crossed it. And it could cross it several times. That might be a good thing, might be a bad thing. But it doesn't always, but you can look at the RSI when it's down here, and then you can zoom in the price and we can start working out where the bottom is. And there's even sometimes when the price does something a little different from the price, and it kind of gives you what is a sell signal, referred to as a sell signal. It's called divergence, and it's a little confusing. We'll get into that much later, but just give you a heads up. So typically when you get down here and things start getting red, that's usually a good place to buy. Now, using one indicator alone as a buy signal or sell signal is not very productive. I've tried it. I've had bots do it. I mean, it's got an effect, but you get better results when you combine a few things together. And that's what we'll talk about in a minute, is combining this indicator with maybe the stochastics RSI. Putting those two together, that gives you a lot more of an edge. It helps you fine tune an entry or an exit, believes it or not. But right now we're going to focus on this little guy. So when it got down over here, that means people got scared, they were selling, whatever, bad news, tank the market here. We were down in the dumps, and this is when you want to start buying. This works out better on the bigger time frames. If you notice, we are on the weekly time frames, and that's a topic that I just glanced right over. Probably should have mentioned that earlier. The bigger time frames are your best friend. They help you figure out what's really going on. You can go to the monthly. Let's look at the RSI on the monthly. We're at the top. We're not ready to talk about the top yet. We're starting to keep talking about, well, sure, you could have talked about the bottom at the bottoms. Yeah, I guess I could have. My bad, I got lost. Now here is the monthly bottom, and it never went below 30%. Well, that's cool. Now, anything below the 50% line, there's a middle line too. I forgot to mention that, didn't I? You got a 30% line, a 70% line. That's the top. And there's one in the middle between 0 and 100, just smack dab right in the middle, just to let you know, hey man, Let you know which side of the fence you're on, man. Are you bullish or are you bearish? It's the easiest way to look at it. If you're above that 50% line on here, well, you're bullish. Clearly, right now, here on the monthly on Bitcoin, we're bullish. Here on the weekly, we're bullish. Right down here, all through here, we were bearish, and that's what we're looking at. So that purple line is what we're looking at. This yellow line is called a signal line. And if I remember correctly, that's like a 20 moving average for this thing. Yeah, moving averages are cool. That's another indicator we will get into much later. Or not on this episode, anyway. But another rule of the game is that when you cross over, not only when you cross over that 30%, that helps you know that's your official buy signal, okay? It's your official buy signal. I would say that is take that with a grain of salt. You want to get some confirmations there, not just blindly buy whenever the line crosses it. Trust me. It will work better in your favor. Wait for confirmations. But that is a common newbie mistake there. I remember making that a lot. But breaking over that yellow line is also considered a buy signal here. Bullish signal. So that is awesome. So as we watch this little purple line travel up, much like price action does, and you can actually chart it just like you can price action, comes up to the top area after it passes that 50. Notice it come right back to that 50 and retested it. Had to make sure it's bullish, right? Just riding above that little yellow signal line. Bumped his head on that top area, 70%. Magically right there on the 70%. Now the 70 percentile, when you break above it, that means you're getting into extended territory. Now here's the thing about the RSI. I should have mentioned it a moment ago. But just because we come up past that 70%, we keep going up. This in the stochastics, which looks a lot like it, really similar. They can get pinned up in these areas. And they can stay here and go sideways, and price can still go up. Just like, you know, they can get down here at the bottom and go sideways like this, and price can still be falling. And that's why your last little breakout is the one that's technically your signal. Right? So this would be the one, but you would not know that as many times as it breaks up and above that 30% line. So that's what we got to look at. But as a general rule, these deep places where it turns red, those are usually some of the sweet spots. So I would not ignore them when you see that, especially on a bigger time frame like the weekly. This was June 22nd. This is that was the sweet time to buy Bitcoin. Let's see how accurate was that. Well, that was pretty sweet. It's at 20,000. I mean, we did dump down to 16,000. And that's what the RSI was doing, the in and outs and whatever. So let's keep those things in mind. It's not the perfect signal, but we can use it as an aid to help us figure out some things. All right, so up here is oversold. I'm sorry, I got them confused, didn't I? I got them confused. I thought I'll do that sometimes. This is oversold. That means everybody. Oh, did I say that earlier? Did I get that right? I can't remember. This is oversold. We need to put a line. You'll just erase it later. You're right. That means we sold too much. We got so scared we sold everything off. We thought it was going to zero. That's what they said on YouTube. And over here is overbought. That means, oh crap, man, we bought way too much, man. We were buying those green candles. It was going up. Woohoo! Everybody on YouTube was talking about this coin and whatever, and it pumped that price up, and I can't find my text box. It helps to have some text up there, I believe. So these are overbought, and it gets really, really green up there. I figured it was opposite. I thought them. Overbought. People buying too much. And the same signal stream. When price breaks past the 70% line, that is your sell signal. Here it broke and then it regained it. That can happen. The final one was over here. That can happen. So the question is, well, how do you know when it's going to be the final one? And you don't. You don't. That's why you need to look at some other things to help you out. This is just something, we're not using this to give us a official, definite buy sell signals, but we use it as a tool to help us kind of figure out when the most opportune times are. Usually here and here is the really good ones though. And then here would be your last chance. Those are some areas, those are some things that'll come up a little bit later. These are really good on my nerves right there. So after going over that indicator, let's see if we can get a few examples with price action here with this indicator. Can we get these? Oh my gosh. Watch me forget how to turn these things back. Can we do this? Does that work? Let me claim some real estate. Oh, that was the wrong one. You suck, Road Duck. That was still the wrong one. I'm not good at this. You guys probably can't even see that. Can we do it this way? Let's compare. Let's just kind of look and this is what we call back testing, folks, if you've ever heard that term. And we're going to back test this indicator real quick. From here, I'm going to touch on support resistance. Well, technically, we're going to do this, then we come to the chat and see what you guys are talking about over there. So I'm going to mark out the places on the indicator up here that are at peaks. Places where it got above that 70% area. I'll keep those, I'll make those red. Because those are places we would want to look at possibly selling. Just looking at the indicator alone. Even at the 70, where we got rejected from there, I'd probably look at that. Can't see much because got my words up there. And then I'm going to come down on these bottom ones. Oh, especially this one right here. We're going to color them green. We'll just do a little comparison study. This one touched the bottom. Is it? Well, this one, ooh, that's juicy. That one got under. Down under. And then I'll just get some other bottom areas where temporary bottoms where we didn't quite do it. Well, I didn't nail the top. Yep. That's why you don't freak out too much when they're happening. So there's another, and this is when I would take it. There's another strategy we can do, adding the RSI, that will help us better to nail these with this than by using this alone. Because when you use this alone, if you went by what it is, what I did here is identify the peaks. Now let's keep in mind the strategy. The strategy was to sell when it breaks that area. Now we just identified the peaks. That's what we're doing here and seeing how it relates. So we can see if we were going by just the peaks, the peaks don't always identify just the very tops and bottoms. Sometimes it does. This one did a good job in getting there. What did you look like? It was it was a higher one than that one. The low one, and that's we'll get into this later, but that is what they call a divergence in that RSI, where you get two different results here. This is trending up and this is trending down. And that's a bullish sign. That's a bullish sign. We'll get into that later on. But right now, let's just keep on looking over here. And look, here was, we got a red one here, a sell. That one did pretty good. That one did pretty good. So it's hit and miss. If you go by the tops, it might be way too early. But now let's take it and let's take these lines. I want to do the sell one, so I want to put it where it would break over the 30. And we'll do this according to the RSI strategy. Let's see, it broke here. Technically, it broke here. Let's see what that one did. It broke above it here. I'll mark that one, and I want to mark this that last one right there. That one didn't do any breaking. These didn't do any breaking. That one did, but kind of broke back into it. I'm gonna color it in orange because that's kind of weird. This one did break here. Nothing happened there. Nothing happened there. We'll get rid of that. So what did these do? Not bad, not bad. It actually got the candle that wicked to the lowest right there. Why are you? So that's where it crossed over the line right here. It didn't, it didn't nail the trend. You'd have to hold it through a lot of stuff right there, but technically that one didn't actually nail it. This one didn't nail the top, but it got you before the decline. It let you know, and that's really what it is, sell signal. Actually, if I put it, no, that's not where you broke. That was the peak right before you broke. That was the right candle. That would have been your confirmation. That would have been the one that you would look for to sell on. Here's where it broke past the 100 or the 70% line here, and they caught this little move down. Then you might have missed that big old move to the upside if you got all caught up in all that, though. So an indicator is not just to give you an end-all be-all. They will mislead you that way, but they can be helpful, especially if you play by the rules and respect the rules, like this one. And then that did a good job of catching that. So they're helpful tools that we can use, and we can use them in conjunction with other things, and that's where they really get more powerful, in my opinion. They start compounding. This was the first break above that line, and you got just a little bump and then the big old dump. Everyone says, well, this sucks. This strategy sucks, man. Well, you got to know you can expect some chop, but that last one actually did nail it. You got that bottom right there, or this retest of that bottom area, and then it started doing some good. This is where it broke down. That was a little weird. And that was the orange one. That was the one where it broke down and broke back in. So that was kind of wild. And then this red one was the one that it crossed over for a sell signal. That worked out pretty well. Now let's see if we can undo everything that I just did. All right, now I'm going to go to the chat, and then my game plan is to talk about horizontal support and resistance, and then we're going to try to unite it with that RSI strategy. So hello, people. Ryan K says TradingView can be challenging. I'm slowly learning how to use some of the features that are available. There's a lot. There's a lot that I don't know, and Joe's got some good videos on it. Joe's probably knows more about TradingView than anybody that I know. Not that you need to pester him with a bunch of questions, but he does. I think he's got some videos already on his channel that address a lot of that, but. Most of the stuff that I've learned from TradingView, I think I've learned from watching Joe, and especially from the group that we both used to be in. He was an admin over there, and I think he did a few videos over there that were really helpful too. But you just get used to it. It's like anything else, just a little at a time. Just find the tools that you use regularly and get good at those. And we just get around to the other stuff as we need it. There's a lot of stuff on here, like the object trees and all of that I could be using, but I just I can hit delete just as easy and redraw it. I don't mind redrawing. I got Market Cipher, says Grasshopper, and the free trading view. There you go. Market Cipher is a good indicator. Oh, I better do this before I forget. I didn't get my chart back the way it was. That will bug the crap out of me. I'll go back that far. All right, let's pull the chat back up. There's Sam, board PC guy. Ironically, I have a free market cipher, not market cipher B, and a trial of TradingView. And MG Motorsport says, I'm watching but cooking my lunch at the same time. I can watch back stuff if I miss later. Yep, you sure can. And there's Chris Klein. All right. All right, so feel free if anything, you have to ask questions about anything that I've been over or anything like that. Feel free at any time. Right now, we're going to focus on price action. We're talking about all the upsies and the downsies of price action. Now, one thing I need to bring up is that I do use Heikin-Ashi candles. Things will look different on the Christmas tree candles than it looks on the Heikin-Ashi candles. It calculates things just a little bit differently, displays things a little bit differently. I use it because it takes a lot of that Christmas tree noise out. I don't like all the blinking lights. It's green, then it turns red, and then it turns green, then it turns red. And that can affect you psychologically. And I could give an example without naming a name, but or ask a question, like especially on the very small time frames. Have you ever seen a trader, they're going good in their trade, but then the first red candle comes is like, I'm out. It can get scared. Yeah, it can affect you psychologically. And they can do that. I mean, sometimes it's just noise. It's just noise. You see them get out of their trade in first red candle on noise. And then you get the coulda, woulda, shoulda. Oh man, if I stayed in it, we would have been up this much. I mean, Heikin-Ashi takes care of that a little bit. It's good for the overall trend. Any of the wicks that are coming down, that indicates some sell pressure right there. These solid square bottoms mean that's some good strong buy pressure. So these candles by themselves tell you a lot about what's going on with, especially with like, I guess the volume of those particular candles or whatever. Kind of reflects that. Versus the old Christmas tree candles here where you just get, is that a doji? That's a Thor's hammer. That's it's indecision time. Oh crap, you just went up on me. You're trying to read all the candlestick patterns and things like that, that's cool. That's not my way. I probably will not go over that here. I can direct you to the sources to learn all that though. Thomas Bukowski and patternsite.com. It's a great place. Same thing though. Same things apply when you got the big wicks. That's a lot of sell pressure there, man. Lots of sell pressure. So the deal with candles, I guess, you got open price, and then the price goes up, it's up, and then it comes down, wicks down, it goes down to a bottom, then comes up and closes. For these little red candles, let me go over this real quick. So it opens here, and that's why we got the top of the candle, and it went up here, and while it did, it was a big old red candle, or a big green candle. It was a big green candle then. But as soon as she started losing here, it turned into a red candle with a spike. Got back past its closing, and then it made a full body again. Went a full body down here, but then came back up wherever it did here, and then finally closed here, and that's what gave us our big square here. That's how the regular candles work. Heikin-Ashi works kind of like that, but different. I think they start like in the mid. They always begin in the middle of the last candle. That's where they always open. A little different. But it takes a lot of noise out of the thing, and I mention this now because they are different from what you might see. But they help when you're trying to identify the trend, and they help you a little bit more seeing the strength of the moves or the strength of the price action, what's going on with the wicks. And if you're pattern trading, because you can draw your trend lines a little bit more effectively, my personal opinion, it helps you see some patterns that may not be as clear when you're over on the Christmas tree candles. That is like a total mess, but Heikin-Ashi kind of streamlined it a little bit more. So I'll use those. Now for the main part of the evening that we've been promising to talk about all the time, I'm going to sacrifice this chart right here. This is the MBT Micro Bitcoin Futures. This is the one that shows all those gaps that everybody talks about. Price needs to come back down to. You have to do that on the Christmas tree candle. See this gap? That's what everybody's freaking out of about Bitcoin right here, and this one right here. coming back to the $77,000 to $80,000 area. Because there is a whole gap trading system, or not a system, theory, I guess you would say, strategy, a strategy. To have those, most of those gaps get filled, especially on Wall Street in those areas. And this is why this chart's important, because it ties with those Wall Street guys. And so if they're going to take us back down, that's where everybody's looking for them to take us back down to fill the gap. This was an example of a gap right here in price. And this happens when price stops trading on Friday and then resumes on Sunday for the big boys with the big pocketbooks. And sometimes they don't like to be missing out on the action, so they manipulate things, whatever means, and get things back down there. It's just how the world works, ladies and gentlemen. But here we had a gap, and they got filled. This one double gapped on us, and that's actually a pattern thing. I learned something new when that happened. It did turn out to be bullish. Didn't feel like it at the time. But they got filled, and prices filled it, and then they're all happy, and then they can decide to run us up, but they gapped over here too. But anyway, let's go with the support resistance line. I'm going to turn off the moving averages. Probably forget to turn them on later tonight during the stream, because that's what I do. I'm very good at it. I practice at it often. Why did that? I turned off volume. I'm very good at forgetting how to which indicators turn things on and off too, because I have just got that boomer gift. Not everybody has a boomer gift the way I do, but so one good place to do, one good way to look at this, when you first approach the chart, here we go into the TA. Now let's get into the business here, shall we? Get 13 people hanging out. All right, cool. If I was approaching this, I'm going to turn you off, Ichimoku. I'll also forget about you. Fresh chart, just us and price action right here. What should we do? We just, this is what they gave us right here. But the first thing I would do is identify my support and resistance. This is one of the first things I think everybody learns or should learn. And the best way to do it is just get your little crosshairs out. I like to use this Alt and H for this. And that makes a nice little line, and I can drag that little sucker up somewhere. So Alt H should work on any exchange that you're on or wherever you find yourself with a TradingView style setup. Alt for horizontal, and we just drag it up till we touch a candle body. I'm gonna zoom in here. I'm on the weekly, and it's good to do this because I didn't talk about time frames. What time frame should we use? The bigger ones are going to give you the best information. Monthly is good, but we're going to start with the weekly. Monthly is good. We'll jump into that, but let's get something, just kind of a little system that we normally look at. That's how I would recommend for a swing trader. Start with the weekly. Now you can copy this little guy by hitting Control and grabbing him, and then take him right back up. And then we're going to look. I'm going to look to the left. I think this might be the easiest way to do this right now. Look back to the left and see some other areas. Now here's an area where we caught and the wick down to it. Okay, let's mark that. I'm going to look to the left a little bit more, and I see another area. I could probably mark this one, but then you're getting a little bit too happy. You can just mark up your charts where you just, oh my God, I can't see price. That sounds like me, doesn't it? You mark up your chart and then you can't see price action enough. Yeah. I'm going to actually skip over that one. I'm just come over here. I'm going to go back to the left. There was an area. Control Z. I'm going to look to the left again, and here's one right there. I'm just going to keep following this little guy up until I find, oh, there's one. Now what I'm doing here is getting support. I might color those green. Should have done that the first time. Probably should have done that the first time. That way I wouldn't have to come back and recolor it. Now support will usually end up being resistance. But if we're charting this, this is all we got to go by. If we're here, this is all we got to go by, whatever we see on the left. Now we can do the I can also draw another one of these lines. Hit Alt, horizontal. You can also go over here to these little fun things and figure out where it's at, but the little lines, and do a horizontal line or a horizontal ray. Horizontal line is what we're using here, the Alt H, and the Alt J if you like. I use that sometimes just to make a line from here to the left, or right to the right, to the right, always to the right. Matter of fact, I might use that little idea right here. I'm going to do Alt J. I'm going to cover this red for resistance. I'm going to come to the right here. I want to get those little toppy tops. Now I didn't bother these over here. I'm just going to worry about this one right here. This basically this impulse move right here. Just we're on the weekly. That's the last ones we had as far as we know, because technically we're going to pretend that we're down here at the bottom. We don't know what's going on, and I can't use the little fun fancy price tool that lets things unfold, and I probably wouldn't do it anyway because, well, but now we're gonna, as things start unfolding here, when we start our journey to the upside, and we don't know what we're going to do, we will use these. You're gonna tighten that one up a little bit, kind of. And you might want to do that, you know, make sure you got them tightened up. Candle bodies. All right. So now let's see how price respects this. Well, sure as the world, that resistance stayed resistance when we got over here. We need a nice ugly color there. She came back. She didn't actually come back and touch our support line though, you know, and get used to that it happens that way sometimes. This is where I find that the fibs come in and help me. We'll get to that later. But it's the same idea. What was previous resistance is now support, and what was previous support is now resistance. I'm going to tighten that guy up. I didn't have him tighten up enough. But when we finally broke past that area, oh, we got a breakout. And then that is your old school buy signal. When you break past a previous area support or resistance, that's a buy signal. Even here on the weekly or on anything. Now we're looking at the weekly, and I'm getting these areas because they will be very key areas when you go down to how price reacts on the smaller time frames. So I would recommend getting the major areas. You might even cut some of these things out on the weekly. And then as we go down to the smaller time frame, which I will suggest that we do here to kind of zoom in, the bigger time frames let us zoom out and see the big picture. And we need to see the big picture. It tells us what's going on. But that would be the first thing you do. Here was a nice little... And as you go along, as we start tracking this along, you can fine tune these things as support and resistance. We'd probably, well, there's the top of our little range that we're in now. And we would look for that to maybe be support as price goes up. It wasn't in this case because we just went crazy all the way up. But hey, we like that. We want that. I'd prefer that. So we bumped our head over here basically, and we finally got past it. But every time, what I was saying, every time that you get past one of these areas, that's technically that's a buy. That's a trade setup. We take it from level to level, and that's how you look at this with your horizontal, and that's what we're moving on to for a strategy. So we couldn't figure out what was going here, but we finally got above it, and then we tested it. And we're just testing each one of these other areas. This one turned out to be a nice one. Well, that was a nice hiccup. These areas, okay, we had a little something going on, but these red ones that we drew, they seem to be pretty strong ones there. That seems to be where we had the best reaction when we were coming back up, was the red ones that we drew, right? What was previous resistance still was kind of a headache. And the same thing with your chart. So we fight with that. And so every area of a horizontal previous support or resistance potentially makes it a good place to take profit, or a potential place to make a buy on a retest. And so that's the general thing for horizontal support. So we got some of these little guys established here. And here I'm on the daily, and if you can even fine tune it on the daily. I like the daily for that. You can fine tune them on the daily, and then they really start speaking, right? Now you can really see how it respects it. How it was rejected there and then rejected there. And then you start, you just start seeing, there's some kind of little shapes and things going on. We'll get into that and the patterns and trend lines a little later. But right now we'd see how it just relates to the horizontal support and resistance areas. And again, breaking past that area, I mean, that was technically a buy. Some people wait for the retest. The more conservative people would wait for a retest. Remember, we're on the daily chart, so you'd be waiting probably 3 weeks for that retest. Are you that patient to do it? Most people are not. Between that range, between support levels, you can measure possible gains just by doing that, looking to the left and seeing, well, I went from here to there, and some possible areas that if we were to break out here and that was the last place we did, could we get up there? If we got up there, we make approximately 29%. We could look at that idea. And you notice that these, and they identify ranges that we trade in too. And then here we are breaking out of that horizontal range that we identify. Going up, and the biggest place of resistance was the red line that we identified. We were just looking we were coming down. We went up with the green ones. We came down, hitting the tops of supports, the major areas there on the weekly. And then here on the daily, tighten it up, and then see how it plays out. And we tested this, lost it, but as soon as we got past it, boom, we were ready to go to our next level. So going back to the market cycle idea, let's do that. Remember what we started with. We go up, we do some kind of distribution, we come mark down, reaccumulation. My line's not matching up perfectly, but then we got mark up, and then we work on a distribution or a reaccumulation possibly. But this was what this was, a reaccumulation. And then we broke out past our levels. Well, that was your breakout buy. Your breakout buy signal. Now, is the buy signal right when price breaks out? Because it broke out here, but it came right back in. And this is where you got rules, and that's something we're going to be talking about, not tonight, but a little bit later, but we'll talk about it. What you need to do, as you get into this game, you got to establish rules. Now, there are some good general guidelines and rules of thumbs to go with, and I'll be sharing all of them that I know throughout these live sessions or whatever. But you've got to make them for your own, and you got to establish a set of rules. It's like a little checklist in a way that you try to abide by and try to keep, and that's what's going to keep you from having your ass handed to you. Believe it or not, some people, and especially if you're new, you got a tendency to try this strategy one day or do this other thing and flip-flop between a bunch of different things all going on. And it's best when you get your own little method, figuring out what works for you. And maybe you have to borrow from other people. You borrow from me. That's what I'm doing this for you. If anything that resonates that I share with you, add it to your toolbox. Okay, so we got an idea for a price action, accumulation, markup, distribution. We see that that's going on. Let's bring up our RSI. Because otherwise, all you're doing is, you can take these level by level and you would trade. You would try to buy at previous support, and when you break out, that's how you would play it. And you would have to play this level by level. You'd be buying here, and then you would be trying to sell here. Now, if you sold there, you put your sell order there. Well, you sold right when it was breaking out. So, there's some holes to try to use this alone as a strategy, right? It's good. It's a good basic strategy to go with. And a lot of your grid bot strategies use something kind of similar, and they break it down into grids and, buy and then try to sell at a higher grid target area. That would be how you would play this, more of a longer game, swing trading, spot trading would be a good way. And always trying to buy near, bottoms and hold. And with the cycle, You know with the cycle that you got a markup. And so trying to buy it down in accumulations or during the markup phases on retest or pullbacks, I guess I should say, for when we break through areas to try to ride it to the next levels there, right? Now, I like to buy support, but some people like to, wait for confirmations and for a breakout. A rule of thumb, we were talking about rules a minute before I got off on a different idea, but hey, we wove back, man. We're doing the weave. We're doing the weave here. We're doing the weave. I'm weaving right back there. Stick with me, kids. Stick with me. Stick with me. So a good rule of thumb that, a conservative trader should have is that would keep you from avoiding this situation. Say we wove back there. You didn't think I was going to do it, did you? Because this was a nice, big, thick green candle there. Look, we're breaking out. We're going to the upside. Look, to the upside. It's a flag to the up, whatever. But it didn't. So you need confirmations. Confirmations should be a part of your rule and part of your habits. This whole trading game that we're going to start getting into, because right now we're just focusing on TA, the chart part of it. But the whole trading game is to get a good set of rules to go by. Rules that will keep you from having your ass handed to you. And a lot of those rules you're going to figure out on your journey. Like, I ain't going to do that again. Those are the best rules that will stick with you a lifetime. Those are the rules that, this is your real trading course right here in the market. When you put your money in the market, that's your real teacher. That's your guru, not somebody on YouTube. The market is the one that's going to teach you the most valuable lessons, and it's going to also charge you the biggest freaking price for it. So when I see people offering $5,000 courses, it just, I don't know, something about it just makes my stomach turn. For new people getting drugged in on things, ideas like that, because the real tuition is going to come when you start trying to apply those things, because you will, when you go through trading, there's a learning curve to it, right? You come to it because you're losing all the time, and then you learn TA, and then you learn trading and trade some trading skills. And there's three pillars that I've got for trading. You need these three things. I want to write it down. You need your TA, definitely. You need your technical analysis. That's the TA. Oh. Yes. You need that TA too. You need the technical analysis. And the technical analysis, learning this, even just the little things of just knowing horizontal support. That's there's some people that only trade that way. What we just looked at, that's the main things that they're looking for, just breaking support and resistance areas before they go in. That's their whole strategy. And you'd be surprised, but some of them do very, very well. It's usually a longer play, a longer game, but they can do it. But learning some things, the TA, the more you learn, the more you know. Well, that's just common sense, Sean. The more it helps you to control your emotions, because the emotions are what will get you wrecked. Now, emotions I have found are just tricky as all hell. I found that my emotions can camouflage themselves as logic. That blew my mind. I did not expect that. I was like, I know what I feel. I didn't know how I didn't. And that's what I find so interesting about this is, as you get into TA in the trading, it's kind of a journey of self-discovery, because you have to look at yourself to get better at this. And I mean, not just look at yourself in trading, but you gotta look at yourself, who you are. And it was part of my journey of getting out of a toxic mindset. I used to be I had a toxic mindset. I didn't want to, wasn't trying to. Maybe I was in maybe a toxic work environment, maybe, kind of, sort of, in a way. The people there also had toxic mindsets, so, or some of them did. You get stuck in situations like that, and that can affect your quality of life, how you treat your family, treat yourself, look at your thing. And sometimes you don't even know it's just happened. You just be something, you're just scoffing at, yeah, I bet that's going to work. Yeah, see what you do. I'll check that he's going to screw that up. Or you're just negative. You're like, I don't want to be that. That's horrible. But you get jaded or whatever. You just find out there's this, working through yourself. You do some journey on self-discovery through TA, I found. And this is what brought me to learn gratitude, or what helped. It helped on that discovery. It wasn't what did it for me. But it was definitely part of the process of just learning to be grateful about things. So emotions can be tricky, because what I found was, and I like to tell this story. It's a short story, don't worry. Oh, snap. What happened to our words? Words come back. I feel like I just lost my words. I'm a loss for words here. I can't believe that. Anyway, continue with my story. I'll retype the words. But you're in a trade, whatever, things are going good, and then you get something like this happen. Like what? Like the other day. And your emotions will tell you need to sell, right? You start feeling your emotions. Oh no, my portfolio is going down. But there's this voice that comes in like, you should sell now. You can get out of the market now. Say, preserve that capital. All these things that you're told start coming in, but in the wrong context. Your emotions will lie to you, and they'll make them sound like they're the voice of reason. That makes sense. That does make sense. I should sell. And look, we got a support resistance area that just fails. That's a great place to sell and capitulate. I should sell now and totally de-risk and get out of the market. And this translation is, I sold the bottom and then it took off without me. Is that what that usually translates into? Or you're getting up here, you're riding this wave, man, and like, oh, she can keep going up. We're going to 100,000. That's what we heard last cycle all the time, right? The cycle's different. It's going to keep going up. You're confident that it will. You like seeing those bags and like, well, I can't sell now. I can't sell now. I even tell you that down here sometimes. I can't sell now. I've lost too much. You get all kinds of things that these emotions will tell you. I want to keep hanging on. I might sell. I got diamond hands, baby. Diamond hands. Oh, until that one day. Until that one day that you're not in that bull market anymore. It's flipped on you. Or maybe you go into a steep correction and you're like, oh crap, I was counting on getting some of that money out during this period. That ain't happening. So you get your emotions. Those emotions will mislead you. They will make you do things, and they will lie to you. They will lie to you. Your emotions are liars. I'm sorry to have to say that. You didn't want to be called a liar, but your emotions will lie to you. So it's important that you get your TA, both kinds, and then also you start learning. The TA will lead to you being able to better control your emotions, and hopefully, your ego also falls into that. That's a weird lesson to learn, but it's true. Your ego is mixed in with your emotions because it goes a little bit more deeper there and needs validations or whatever. But the ego, displays of ego are also emotions. So when you see the people out here, there are a lot of gurus out there that, well, they really get into their emotions, and I'm not saying you can't be emotional, but you want to take the emotions out of your trading, period. It should not influence any decision you make. And if somebody needs validation for being in a successful trade live on YouTube, well, yeah, you're getting into emotions. I'm just saying. It's that sneaky. The overconfidence you get when you start seeing that portfolio go up, that's your ego and your emotions playing. A lot of ego coming in there. You see that wallet balance start growing up, or that portfolio balance going up, and then you start getting some thoughts in your head maybe that weren't there before. Before there were hopes and dreams of what you could do, and now maybe you find yourself maybe feeling like the power that you fantasize might be coming from what you could do with this money. Maybe you started latent your self-worth. Well, I'm worth more now. I'm better now. I know better. I've gotten here. I know, therefore I know more than you. I am better than you. And these not only screw you up in trading, but these kind of things can screw up your life choices too. And we don't need that. So that's something the TA helps you in. You got to get your emotions under control, and that comes. And also, just to touch on the emotions one more time, I told this story when I was first starting out and learning the TA, and then you learn the TA, and then you got to start applying it, right? And you're like, okay, I see how to do this. I'm starting to get an idea how to do this. And then it comes down to you putting your money in on that trade. Oh, hell. Your emotions, even on spot when you first start out, I remember I couldn't execute a trade on my phone. I couldn't do it because my hands were shaking. The market went down and then it decided to reverse, and I was like, oh shoot, I just sold on the drop. Remember the things like, it's all right, we're gonna hold, it's all right, it's going up, I might buy more, yeah, okay, and then boom, it's like, oh, I gotta sell. And then kind of like what it did today, and Bitcoin decides to go back up that way. I can't buy, or even trying to execute a trade. That's the worst example. But even trying to execute a trade, make a breakout trade. You got your trend lines drawn or whatever, and you got the actual breakout, and I can't. Yeah. That has that happened to you guys? Have you experienced that? Come on. Tell me. Emotions. And then that third pillar, thank God he finally got to it. I didn't think he's ever going to shut up. This one is probably the last one that comes into play, but so important. Trade management. I can't spell management. I forgot how to spell. And this also includes your risk management. Just sort of abbreviated to start with. I should have. Yeah, I don't know the abbreviation. Trade magnet, and risk magnet. That's what we're going with. So these, eventually we get to this after we get our TA suitable and down and good and get a grasp, and that shouldn't take long, man. You start seeing improvement of that within a matter of weeks. Like within a good 6 months, you should have a fairly solid understanding of technical analysis. It will grow and evolve, and concepts will start clicking more the more that you're in the charts with it, and you'll have a little light bulb and aha moments that will start, and things that you've heard routinely somebody say that didn't make sense, and you're like letting it go in one ear and out the other because it's not clicking. All of a sudden it will click, and you're like, holy crap, Elliott wave, 3 waves up, or something weird, whatever. Something will click, and you're like, and that's the beauty of it, and that you finding your way. It's finding your way through this market and using your tools and everything, and they line up, and hopefully you go forth and share that with other people that seriously want to learn. Because this is a great way to change your life. They don't teach this in school. They don't even teach this on Wall Street. Well, they do, but I think they come to it just letting you got to figure your own way out, your own way from what I understand. So trade management, and that includes, your entry to the trade when you jump in on the old price action when we talked about it a little bit earlier. When you jump in, are you FOMOing in as soon as we break that trend line? Are you waiting for a retestment? And so you enter a trade, get your money in, and then it's going up or down. Are you using leverage? Because, there's an option which amplifies your emotions. That's why we don't recommend doing any kind of leverage if you're brand new. Spot can do it. And then in crypto, your biggest gains will come from spot. Swear to God. Your life-changing money will come from spot trades that you're holding. Yeah. For real. It ain't going to be through scalping in the 1 minute or anything like that. It's going to be from your big spot trades. Yeah, and you got to be patient. But now the good news is you only got about 12 months left. All right. So with the trade management, and that means that's where you identify a trade. You have You have your signal, your trigger that will tell you when to enter. We'll get to with that later on. And then you got a set target to sell at. If you're actually trading, doing a trade, you're planning that trade. You have an entry and an exit. And I don't know how many times have you seen where somebody may have they've used this tool, especially on leverage trading, right? You see this a lot. This is to help you plan your trades. And so this middle line here, and that this tool is found. Where is this tool found? Over here. It's the 1, 2, 3, 4, 5 icon down. And you got the long position, which is what I clicked here. And it's got the green on top and the red on the bottom there. Now, if we were to go to price action, because it probably looks a little bit better for price action. And let's say that we were... let's stick with what we got. I'm not going to draw a trend line. Let's stick with what we got. With the ideas of just what we got, support and resistance. We're looking for the red lines, right? We'd have a trade idea, even here on the daily, of this guy up here. This previous area of resistance being our target. And breaking past this other area of resistance right here would be our entry with a stop loss. Oh my gosh. I mean, some people would technically put it below their last level, and that's just absolutely crazy. Because a 25% stop loss, I can't do it. Ideally, when you plan something, you're looking for if you're trying to plan a trade, this is a little bit, we'll get more into this later on, but you're trying to look for at least a 3-to-1 risk reward ratio. So you want to make at least $3 for every $1 that you risk in this market. That's the general rule that will help us, the rules that go to help us actually build our accounts. And looking for a trade that doesn't give you that much is, well, you should probably wait or try to find a better trade or wait for a better entry or something. That's what that means. And this tool can help us kind of identify that. So if we were going to try to do that and put a stop loss down here, meaning that if the trade went against us, we would tell the exchange to sell off so that we wouldn't have to just endure all this, that we can get out of a trade. That's what it's there to help us. In case the trade doesn't go in our favor, we can only lose so much. A lot of people, general rule is to only risk about 1 to 3% of your account, of your trading account total. We will get into this much later. For right now, so if we set a stop loss like below this area, below the green line here, that last area of support, what's the area of support that it should have flipped as it flipped over, that one would make a good place. That's about 12%. That's doable. That gives us a 3.79 to 1 risk reward ratio. And it kind of looks like this, I guess, if we're seeing it here. We're looking at this idea, right? And that's taking the safe approach. That's not buying the bottoms, although I'm for that. That's applying the breakout for a trade. All right, so trade management would be, how do you plan the trade. The rule is plan the trade the plan. What you don't want to do is get out at the too early, because your risk to reward ratio is totally screwed. Oh, congratulations, you risked congratulations, you risked $200 to make 25 cents, or it was not that extreme. This is a 3 almost a 4 to 1. So you risked here, you'd be risking $1 to make almost 4. Under this scenario, you risk that $1 just to make maybe 60 cents or something like that. Not the best odds, not the best. No, you got out too early. If you could let your emotions will mess up your trade management. That's why each one of those 3 things we're looking at, they kind of build on each other. Now you've got your risk management, which also comes into that trade management idea, and these are things that you'll pick up much later on. But you don't want, if this went against us and came back in here, well, I mean, if you trade the plan, you'll let your stop loss stand. If you got a good trading plan, you're good. You should have your stop loss in a place where most likely it's not going to get hit if we come back below these areas. And that's what you're trying to do with the stop loss. Or be accepting that, hey man, if it just breaks below this line, I'm just going to get out and just, have a really, really tight one. But you could easily get stopped out and the trade take off without you. That's what you commonly see sometimes. My price might dip back down in here before it does take off. Got lucky on this one on the daily. It just kept on going. It does not always work that way, ladies and gentlemen. It does not. But if it comes back in here, there's many times of traders that don't have a good grasp of their emotions or have this idea of trade management. And, I'm cutting off early. Okay, you can do that. That's your emotions, Tony. Isn't it better just to go ahead and jump out now? So you don't lose everything? That's your emotions talking to you, and they sound perfect. Why, these people I even see teaching that do this live, they come out with a great excuse. Well, whatever they say, oh, you could have seen that this was happening, and that was, whatever the narrative they need to do, but just cut off your loser, But in reality, it's not part of the trading plan that they set out. So what's winning over here? What's winning over here? Is your trading plan? Are you sticking to it? Are you trading like a bot? Not letting your emotions influence you? Made a plan, knowing where price is going. I don't know what year, but I mean, you're either trading the plan or you're not. You're either trading the plan or you're letting your emotions get the better of you. If you planned it out, emotions should be off the table. This is a matter of math. You just calculate it out what you're going to do. Let it ride, because you got your stop loss that's there to save you, so that you only lose that $1, so that you make 3 up here, or whatever you're doing, $100, whatever your stop loss is, right? Your 1%. Ideally, that dollar would represent 1 to 3. Some people go up to 5% of their account. So if you had a $1,000 account, through the math, you'd be risking about $10. So you want your stop loss set so that you can be consistent. If you're trading, you're trying to go for consistency here too, to build your account. And that's something that's not talked about a lot. We'll get into that. But you can't do it if you're always doing something willy-nilly. Oh, I'm get out at this, or I'll let it stop me out at $400. But if you keep it consistent, if you do get stopped out, you're always only stopped out $100. Then you can manage your account. Trade management, account management. That's where this comes into, and it's not talked about enough. But that's where discipline comes in. So you hear other people talk about how disciplined that they are, and then how they're disciplined with the risk management, but they don't always display some of those skills that would actually show that be true. Because if it were true, you wouldn't be bailing out at the first red candle, or you wouldn't be bailing out when you first come back into the stop loss area. Because how many times, and this is why, you calculate your stop loss at a good level where it most likely will not be hidden. And if it's a good trade, it won't be a bad risk to reward ratio. It will be a good one, and it won't be a crazy stop loss like at 30%. I've seen so many trade setups from even some of these gurus with a 30 or a 40% stop loss. And I'm like, who in their right mind wants to make a 3 to 1, if they're lucky, that target will even hit, to risk that much? I don't want to lose. I don't want to take $100 trade and lose 40 of it just to make $120 or something crazy like that. No, it's not a good trade. It's not a good one. So if we're set up where we get liquidated here when we lose $1, we've done it right. Or that 1%, whatever that may be, you can. And when it comes to leverage trading, that will help you determine your position size. And this is further on down, but it applies mostly for the leverage trading to figure that stuff out where it gets complicated. But we've set our stop losses at strategic places so that if we do come down, if they get stopped out, that means the trade is invalidated. For sure, invalidated. Like, this is definitely not going to play out if we lose this level. We try to get it out of a place to where it would come down. We don't want to set it too high. We don't want to set it too tight. And you can definitely set it there if you want to, but if you come back and wick it and then go off, well, that sucks. But a lot of times they'll have a good stop loss in something, but they won't stick with the plan, and they will sell out. And then what happens? Then things turn around, go back in the trade, and then it's the woulda, coulda, should haves. And see, I was right anyway, but well, you didn't take that. You bailed out that trade. Don't count. You didn't trade the plan. So maybe those ideas make a little bit of sense there. So I do believe the TA, the support lines, the resistance, the tools that you use, maybe the indicators that we add. You're building something that works for you, but you got to start with price action. That's the first thing, and that's what we tried to cover earlier tonight, going over how price action works in an upward trend, a downward trend, the market cycles. We went over all that tonight. So those are the basic fundamentals, I think, of TAs, understanding that, and the support resistance lines. I think the next stream we'll build upon this and start introducing trend lines and get into the trend line magic, and that might go for a couple of sessions, because I love trend lines and they tell me a lot. But these are the essentials: the TA to help you control your emotions and your ego, and to help you trade, to manage your trade. We didn't even get into all the risk management. There's so much to this, but these are the three pillars of success if you're going to make it in this whole market, and they build upon each other. And the first step is learning the TA. All right, let me come back over here and see what you guys. Chris Klein says, I wish I wouldn't have missed the first 40 minutes. I'm disappointed in myself. Best tea knowledge right here. Chris Klein says, I usually pattern trade, but I want to learn the way you do it as well. Okay. Well, I pattern trade too. And that used to be what I always did. What I did, because it made more sense to me than all the other stuff. And so even some of the stuff that I do now, it wasn't making sense to me then, but the patterning did, and it's successful. But I find that, it depends a lot on how you look at it. And it's got a lot to do with zooming out. Because if you're zooming in and then trying to force patterns, because there's too much of that, look, a shoulder head and this, and it's got this. I mean, because I remember when I was learning some of the patterns and things like that, you would look at the chart and you could see something two different ways. You could see a head and shoulders, and then you could see an inverted head and shoulders. Now, which one is it? Is it the inverted one, or is it this one? Which one is it? Is it the inverted or the inverted head and shoulders? I mean, that's just one example. Is this a cup and handle? Or is it part of a double bottom? Or is it a cup and handle, or is it a continuation down to something else? Is it a drunken cup and handle, or is it just a higher high and a higher low? I mean, for real. So you can make this as complicated as you want, or you can make it as simple as you want. And the simplest way I found is just to zoom out and just go with the basic shapes. The triangles and the channels. An OG person, I think, I didn't tell me this personally, but I saw it on an old Reddit post, and I was like, it can't be that easy. And that's not that. No, the channels and triangles. That's what they would say, and I would not. I couldn't accept that. I was like, that just sounds too simple. It's got to be more. Where's this pattern? What about this pattern? Oh, you don't know nothing about this pattern. Adam and Eve, you don't know nothing about that. Oh yeah, well, and then you get into who knows the most patterns and whatever, and I don't know. It just gets weird. It gets weird. You got to zoom out. We're not here to, we're here to make money, right? But I mean, you can sit here and look. Oh, look, that's an inverted shoulder, head and shoulder to the upside, and I would be telling you, well, I get this. I get this guy that's got a 72% chance, according to Tom Stukowski, to break to the upside. He's got to give enough time to do what he's going to do. And then you got when do you enter? I mean, are you going to be the breakout trader? I mean, that's what you usually first learn. When you do pattern trading, that's what you're taught, is to buy the breakout. I don't know. And some of the people teaching pattern trading, doing all this, I mean, they never talk about buying the breakout. They're like, you just find out, I'm already in the trade. And I'm like, well, what was your signal? What did you cross a move? Did you do some? What was your signal? I don't. So there's still rules. It comes down to rules, and then it comes down to weeding out your bad habits. We know what the good habits are because that's what we keep reading about, and it's what the greats told us, like Thomas Bukowski and W.D. Gann and any of the Charles Dow, all the greats that were they give us some of these guidelines for TA. They're already established in the best trading things, and you read their works. That stuff is still gold today. Reading their mindset and how they thought about it, that's still gold today. I don't care if it's 100 years old. The way that they talk about the markets, it all still happens today. And the people, the way you feel, is still the same today. It's still relevant. The old masters are not irrelevant at all, and I highly recommend you spend some time just reading any kind of materials or articles about them, and maybe their famous quotes or something like that. I mean, that's the insight right there. It really is. I think we got lost again. Squirrel! All right, guys, I think I want to wind this down. It is 9:30. I gotta get ready for the show. Let me continue here what we got. Fill the gap without making a mess. Well, I'm way behind the chat, aren't I? Joe says, loving the info. FG Motorsport says, I do get myself confused with retests, to be honest. Okay. So what I want to do is kind of make little notes of these things. So, because, you know, I don't sometimes, what used to be a problem for me, and now it's like, maybe it's not a problem, and I don't, you know, it doesn't, and it may be a problem that, what I said earlier, that I take, maybe, you know, after we've been in this game for a while, we take for granted what, you know, what would be valuable for somebody that's intermediate or a little bit newer to it. So, retest. Control Z equals undo. Also, undo button. Thank you, Joe. I always hit the, do I always hit the delete? Or I think I do the rewind button up there more than anything. I just had never gotten the habit of doing Control Z when I'm on charting. I don't know why. Doing on everything else. Suddenly, cubic zirconia hands. Oh, here we go. Glittery Marshmallow says, I'm impulsive. I got to do better. Well, I mean, we all are impulsive. I'm still impulsive. I don't. It doesn't ever vanish. I don't think. I still feel FOMO with things, and a new project comes, and I mean, YouTube. And you got to realize that the gurus or your channel. I call them gurus, but your crypto influencers or content creators. I mean, remember too, it is YouTube, and there's a lot of clickbait. So there is an incentive to make an enticing title and an enticing thumbnail, and an incentive to drive hype. And even if, you know, and there may be even some bad actors that may be being paid to shill coins. That happens. It has happened in the past. I think some of them have got called out and might even got in legal trouble for some of that. So I haven't seen as much of it lately, but you got those ideas. But it's easy, you know, and you see on the green days, you know, everybody's really bullish on YouTube and crypto Twitter, you know, and then on a red day, it's like, you know, it's like the end of the world, and that affects, and even just watching the mood of the influencer that you look, that affects your mood. If I came out here tonight on Australia, I'm just all down and then have no hope for Bitcoin going up. I'm all bearish and everything. I'm talking about bearish things, and it's going to make you feel bearish. And if I come out here all excited and, you know, pumped up and confident we're going straight to 130,000, you're going to feel like we're getting ready to go. I need to buy some more. I might ought to get that coin before it takes off. Oh, and all coins are probably going to go up too. I might ought to pick up some, you know, and maybe it's not the right time to do it. It's crazy. So it's really important to get your emotions under control, really. But the TA will help that. The TA helps with that. And then it's just you constantly just bringing yourself back to ground zero, bringing yourself back to center. Glasshopper says, even paper trading gets you emotional at first. I think it does. It can, yeah. And then I find I forget about it. And then that's forgetting about it. So it's still got a $10,000 or $100,000 paper trading account over. You can get a paper trading account on TradingView too. You can hook this up to. You can actually hook TradingView up to certain exchanges, especially like Forex exchanges and things like that. I hadn't really checked much lately on the crypto, but there's a few. But yeah, just not constantly worrying about it. Turn $100,000 into over 1.4 million. Well, if I had done that with more by what's to pop more Bitcoin is what it tells me. That's what it really tells me. All right, let's see if there's any questions over here. Bobby S says, that's right, buy the retest of the breakout, right? Well, that's a conservative, yeah, that's a more conservative thing. Some people, I mean, you get a breakout and your degen wants to just buy as soon as you break it. Like, yeah, buy, woo! And you know, I do that sometimes. I'll admit it. I do it sometimes. Because I got the risk tolerance for it, and also I'll accept it if I get my ass handed to me. But sometimes I will do that before it, not always wait for the retest. The more conservative trader and the more disciplined trader would wait for that retest. That retest does not always come, though. Does not always come, especially in the part of the market we're getting ready to head into. So those are some things in the markup phase. You may not always get those retests that you're looking for. In a ranging phase, you're going to get lots of retests and then some in a ranging phase. And remember, most of the time is spent doing this, and this is all summer. Gosh darn it. I remember being on the stream here when we're in March and talking about these ideas, and I didn't even listen to it. I was like, you know, it's looking like we might just go sideways all summer. And I was like, that would suck, wouldn't it? And I'm like, sell in May, walk away. I mean, there's so many things, triple top, patterns, indicators, whatever, saying, hey man, this is probably it for a while. Nope, we can handle it. We'll just go sideways. We'll spend all summer just going sideways. We might catch a few deals there. Man, that was horrible. That was horrible. I'm done with that. I'd say that anyway. That sucked. I did not enjoy it. Even though seeing it was going to eat, it's like you go through so much psychological, so many emotions during that. So many emotions, all the pain that you put yourself worrying about your damn account. Am I covered on this? Is this going to be okay? Should I get out of this? Should I stay in this? Or is it going to? It's torment. And after that, after this little move here, I'm like, I never want to put myself through this again. It's not worth it. And I used to I had a mentor, in the trading group that Joe and I used to be in, and I would get ticked. Really, I would, because you would just find out that he's out of the market. I mean, after things started going down and everything, you'd find out he's already out. And then he would say something, you have to listen to my cue of a bearish retest. That means if I say it's a bearish retest, that means sell. And I'm like, why don't you just say sell? Because I missed that. I got to ride this down. Thank you very much. But I will say this. I can't tell you how many times that I'd seen that man draw this trend line. This idea right here that I even preach here. This is a sign to get out when the trend line breaks. I remember him doing that. It never clicked. I don't know why. Very basic thing. Very basic thing. I'd see it. I'd understand it. Oh yeah, I see that trend line. Okay, break trend. But for some reason, I didn't respect the trend line was so magical, to tell you so much, or how important that they were. I was like, I guess I just thought, oh, it's a trend line. Okay. Well, we can get back in it or something, right? I mean, it's just, I didn't respect him like I should. I didn't hear that. That's a lesson that I was being taught. I think it probably could be explained more. I don't know. It wasn't like the main thing that he had, but he did do that. But it never clicked with me until the late. Like it's one of the last things that clicked. I'm like, oh, and then everything tied together. I was like, oh, that was my aha moment. After all the other stuff that I'd figured out on my own with trend lines, the last thing I learned was when you actually do break that trend line, that means it's probably over. And when I started taking that more seriously, and that really tightened up my game. That's great. Okay, it's 9:40. I'm going to have to get off of here. Let me make sure. Board PC guy says you're calling yourself out for attention span as I stare at Bitcoin price going. All right, so we seem to be doing good there. Thank you so much, answering. Thanks, Road Dog. Definitely rewatched. Enjoyed that. Ryan K says, I'd like to go step by step. Okay, let me. Whoops! Oh snap! What happened? I'm just trying to read. I'd like to go step by step reading a chart without indicators. Okay, working in lines, indicators, etc., and learning your thought process one at a time on each indicator, and then bringing each. I should just. Can I copy that? Do you let me copy? Can I do that? Oh, I can copy. There we go. Saving some ideas here. Really preach the lesson of the night: TA, emotion, ego, trade, and risk management. In a nutshell, yeah, those are the 3 pillars, I believe. Said you didn't have to do what you did when you did, but you did, and I thank you. I like that. Yeah, you're going to be so blessed for blessing. So, I honestly, I enjoy doing it. My wife didn't take me in seriously to crypto until we were sitting at the dinner table one day when we were talking about. I think we were talking to my little daughter about choosing what you want to do when you grow up and about finding something you're passionate about. And I just haven't been. I'm passionate about crypto. And then she looked at me and then it clicked and she said, "Oh." And then it's like she finally clicked, and because used to it was just being a pest. It was a pester always, But then when I realized it, I'm like, yeah, it is my passion. And she realized it, like, okay, well, that's what you're going to do. So I just enjoy it. I think most of us on YouTube do enjoy it. It's fun, but it can be kind of taxing. It's much easier to stream than to do the videos, but your channel grows quicker if you do the videos. So I sacrifice channel growth for just. I think you can get more information out this way and be more impactful this way. Maybe a smaller crowd, but it's the right crowd. Guys, thanks for hanging out, and thanks for hanging out with me. And we'll put together a syllabus, and we will continue on with our TA study next Thursday at 8 o'clock. And I'm going to get ready for the 10:30 altcoin show tonight. All right, see you guys later. Thanks for hanging out. John? End screen.
Come here, boy.
Wasn't that good? Didn't I do a good job, Road Dog? I got it up there real quick. Yeah. You did fine, Sean. You did just fine, Sean. Do you need a hug? I need a hug.
I don't need to analyze.
Come here and a hug.
Every word that
Bring it
comes
in,
out
Sean.
of
Bring it
my
in.
mouth. Make you look
It just feels so right. You need to shave, though. Get out of my face, Sean. But it feels so good. Sean. Ow! Dang it, Road Dog.
Sharing secrets, you wish really was part your life. Basic bullets, with no bullets. Does your wife know you're begging for my notice? Promise you're the same. Running for the meds. Sure you like my vibe. Pass my candy on my